Hello, good morning, everybody. My name is Alexander. This is the chart breakdown for today, Monday, 31st of October, 2022. So let's go. A recap from last week, Friday. This market was for US 30. This market was around here. That I said we needed more bullish stance. If we had a break of this level, then we could push this market for a bearish move. You could see that before the H4 closed, I got a nice entry on the lower time frame where I pushed this market up for 50 pips plus. And you can see the bulls we are painting everywhere. You could see higher lows on the weeks. And a level was still holding on lower time frame, and as such I was not bearish totally, and you could see it paid off. What are we looking at this week? Today is the last day of the month. I thought last week was the last trading day of the month. Today is the last trading day of the month. You can see that this support here on the monthly still holds. We had a bearish push and a bullish candle. And as it turns out, there will be no way this candle wants to go back down and close bearish. It's not possible. So we might have a bullish close on the monthly, or some type of bullish type of pressure on the monthly. If it does not close above the week, it closes inside of it. So we might have either a bearish November or another strong bullish November, depending on how this week turns out. On the daily, we see the market is currently at a trend line. We might get some type of small reversal or a bullish close. If we see that bullish daily close above this trend line, it means we are pushing higher, and maybe higher. So we have lots of ground to cover when it comes to the higher pushes. So we have lots of ground to cover. Let me switch to weekly and see. Yeah. It might hold here, or it might hold higher. So back to the 4 hour. We might see some type of rejection here, some type of rejection where the market just pushes a little bit down before pushing back up. So we might see that happen. If that happens, no problem. Today is Monday. We have a lot. This week is jam-packed with news. So what I'll tell you guys is to be on the safe side. Don't risk too much. Today is Monday. We have the inflation rate for EUR. We have CHF retail sales also. On Tuesday, we have interest rate for AUD. And we have the manufacturing PMI and both job for USD on Tuesday. We have FOMC on Wednesday. There is a high potential of the Feds hiking their rates by 75 base points. We have ADP on employment that same Wednesday. We have CHF interest rate on Thursday. ISIM service PMI and unemployment claims Thursday also. On Friday, we have PPI, NFP, and unemployment rate for USD and EUR. So this week is jam-packed with a lot of news, so you have to be careful. So how does that play out? If we get a 75 base point hike, we might just see this market push a little bit up or reject. So we would see more data as as the market unfolds itself. But as of today, we might see some type of rejection before it pushes back up, or we might just get a bullish candle that signifies that the bulls are still present in this market and push it to the next phase. From here to here, that is a 30 pip. That's it. 300 points move. So 300 points is a nice move for a day. AUD/USD. This candle was painting, and I said on the lower time frame there was a potential where the market was going to hold, which was on the 1 hour. That level did not hold. You see two bearish candle closing beyond that level. It means that level was broken. If you remember, I said the market was giving lower highs, but on the previous video I was saying lower lows, so excuse me, it was a mistake. So it was giving lower highs, and as such why we saw the market pushed lower. So right now we have this level here where the market might break. We have a lot of exhaustion going on there, so there is a potential. If we see this level break here, almost seems like it has broken, because we are starting to see higher lows in this market. We're starting to see higher lows on this time frame. So if we see some nice bullish price action, we might want to push this market to at least this point. That would be give or take 40 pips. That's 30 pips. Higher would be 50 pips. Higher would be 100 pip. We might see that happen. And this H4 candle is just paint opening. So we might see a little bit of rejection back to this counter trend line for a pushback up. Or we'll just see this market push back down here. Also, there is some type of support around this point here. So we might see the market bounce around this support. If this support holds, then we would keep pushing the market higher. If not, we would push this market a little bit lower. We still have a lot of up room to go. USD CHF was around here. I said we still had sellers pressure. The sellers pressure is still present, even if it pushed to this level where I said if it broke this level, we want to see how the market will fare around this level. We see the market around that level. If you draw a line on the resistance, you'd see that the resistance is still holding strongly. We have a bullish doji, bearish, bullish doji. This candle is just opening. It might close bullish or it might close bearish. If it closes bearish, we want to go on lower time frame to see how it fares. Then we can push this market back into this level for another 60 pips, give or take 60 or 50 pips. And if we push the market further downwards, that would be over 100 pip, over 120 pips. So if this level breaks, this whole level here, if it breaks, we want to see the market push higher. This would be give or take 60-70 pips again. So we have 60 pip up move. We have another 100 pip move downwards. So the push downwards has enough of reward than the push up. So we would find out where the market wants to go, then we'll follow accordingly. BTC, Friday, this candle was painting. I said we might get a tap of this level and a close back as a bullish candle. If that happens, we would have that bullish push. If you remember one of my chart breakdowns where I said we are expecting an explosive bullish push, we might still get that explosive bullish push. So there is still a higher chance of that explosive move. Once 22K is tapped and broken, we have 24K to contend with. If it breaks, that means we have a lot of room to cover. We might get 45K, we might get 30K, and we might get 60K back. We might even still tap 50K also. So the explosive move is in the works to happen. All right. So that is for crypto. DXY still painting the same thing. DXY still doing the same thing. This level seems to be holding. We might see this a bearish close. If we get a bearish close, that means we want to push the market to a new level. If not, if this level holds, then we'll push the market higher. All right, so that's all for my chart breakdown. I'll see you guys on Wednesday. Take care, goodbye, and God bless. Don't forget to like, subscribe, and share. It's very, very important. I need that. All right, bye-bye.